Good morning, everyone. It's Jared here from the Alpha Capital Group, giving us a preview for the week ahead. Now, since our previous update on Friday, we had a very turbulent Friday evening close into the weekend, as we saw increase and expedited tensions between Russia and Ukraine. As a direct result, we saw very swift selling in the indices across the board. Any risk associated assets, like the stocks, indices, and even the cryptos in other spheres all got heavily beaten and taken lower on Friday and into the course of the weekend. Now, as a direct consequence with Russia and Ukraine, we saw some massive moves, particularly in the dollar. We saw dollar strengthen. We saw gold absolutely rally, and we saw a massive, significant move on gold into Sunday night's open as well. So very much a risk off feeling in the markets at the moment. And as we know, when the markets are risk off, we tend to see a move towards these safer havens. So when there's a flight of risk of war, we tend to move towards gold. We tend to move towards the safe havens. So obviously dollar, that reinforces the argument for a strengthening dollar. So I suppose besides the fact of all these other data prints and other fundamental pieces during the week, I think traders have to be very careful of these fundamental narratives and updates regarding the escalated tensions between Russia and Ukraine. So definitely something to keep an eye on through the course of this week, because anything negative regarding war or maybe deployment of troops or anything associated with that will see the markets turn risk off. And as the markets turn risk off, you will tend to see movements out of the indices, out of the equities, and back into gold, dollar, and other assimilated safe haven asset classes like the yen and the Swiss franc as well. All right. So if we very quickly just look at the economic calendar for the week ahead, today we have ECB Lagarde at 4:30, 4:15 speaking, which will probably be the main kind of driver today. So for fundamentals in Europe, we have Japanese GDP figures later tonight. So that'll be kind of a quieter, softer day Monday. We had a lot of thinner volume this morning in the indices overall. So we do want to see kind of the markets kind of heat up later on through the afternoon. Now, this week is definitely a more data heavy week than we had last week, because we've got a wider range of data pieces. We have Chinese figures, we've got Japanese increased numbers out of Asia and Australia and Japan in the overnight trading sessions, and we have a wave of data throughout Europe as well. So Tuesday, average hourly earnings, excluding bonuses, claimants, very important to keep an eye on this in the UK. So 7 o'clock, you will see a little bit of a bump in volume into the 8 o'clock open in London. At 10 a.m., we have European GDP. So we did have the harmonized figures out of Germany last week for CPIs. This week, we now have the ZEW survey and GDP out of Europe. So that will be something to keep a very close eye on. Of course, anything above expectations will lead to a stronger kind of firming up in the likes of the Euro stocks, the likes of the DAX, and stock markets in general across Europe. So just keep an eye on that one, because if this fails to meet, you will see probably more negativity in the indices. All right. 10 o'clock, as I said, ZEW survey will obviously be important as well. So the economic situation, so sentiment, this is kind of a more sentiment driver in Germany and Europe to, I suppose, determine kind of not just from a business perspective, but on a kind of more macro overall level throughout the Eurozone. So if we then scroll down through to Wednesday, not really too much else on Tuesday. Wednesday, a bigger day, we have Chinese CPI. So that would be a big move overnight, because if the Chinese CPI runs hotter than expected, well, then that's definitely going to affect markets. You look at the CPI year-on-year index, the CPI is coming in at only 1%. So if that comes in at, let's say, 1.4, 1.5, that could be a very risk aversion sentiment during the Asia session overnight, because the CPI is important across the world. Now, PPI is at 9.4%, so that is a massive figure as well. So, of course, anything above that puts more pressure on the stock markets overnight. We did then have CPI then in the UK to follow at 7 o'clock on Wednesday morning. So again, anything above expectation on CPI. So if that runs hotter than, let's say, 5.4, so if it's 5.7, 5.8, you will see a lot of movement in the likes of the gilts, the FTSE, and obviously the pound as well. So important to keep an eye on that. So when you're looking at CPIs and PPIs, if you're looking for the indices and the stock markets to run hotter or be firmer, you need these numbers to be weaker as a direct consequence. All right. Moving to kind of Wednesday afternoon, we have the RBA comments from DeBell. We have industrial production in Europe, and we have the ECB non-monetary policy for ECB meeting. So that'll be a slightly less important event. Retail sales, 1:30 on Wednesday, followed by CPIs in Canada will obviously big afternoon. So Wednesday afternoon, 1:30 into 2:30 open. So 2:30 p.m. a US session open will be big. Because if these retail sales aren't positive or aren't beating expectations or fall flat to what we would expect, you'll probably see further wave of negativity. So moving across then through Wednesday evening, we've got BOC's Lane is speaking. We have the FOMC minutes, so that'll be an interesting one. The FOMC minutes from the most recent Fed meeting, so I think just a little under 2 weeks ago. So that'll be a big idea now. So we'll be reading more. So this will be used more as an insight for the next FOMC meeting. Will the next FOMC meeting, will they raise it by 0.5, or will they go with their ideal scenario of doing more gradual 0.25% hikes? The pricing in and the markets is that we're about 95% certain that they will raise rates. But it's just to determine what kind of severity or to what degree of significance is that going to happen. Is it going to be 0.5, and is it going to be more a significant shockwave to the markets, or is it going to be 0.25 and more gradual? Okay. As we move to Thursday, then we've got Aussie data during the night, unemployment, employment change, unemployment rate, stuff like that. So that'll be important to keep an eye out on. But then as we move to Thursday, we have housing starts, we have initial job claims, we have building permits. So that entirely compiled together will lead to increase in volatility into Thursday's open session as well. So you can kind of see that this week compared to last week's video and outlook, we have a lot more fundamentals to take into consideration as well. All right. And as we finish out the week, Friday, we have pound UK retail sales and Canadian retail sales to end the week with. In the afternoon, we do have the Fed monetary report. So overall, through the course of this week, a very, very, very significant week ahead, not just from the data point of views that we have, obviously a busier week compared to last week, but also in the wake of what's happening in Eastern Europe with Russia and Ukraine. Okay. Now, if I have actually on my list, first things first this morning is gold. So if I just open up gold, first things first, what can we see? A massive wave of bullish impetus on Friday. So Friday's price action went from kind of 18.20, 18.25 all the way up into 18.60, 18.65. So there's a good $40 move in gold on Friday, which was a truly massive move on an intraday basis. So $40 move in gold is massively significant. Now overnight, we haven't seen that kind of continue into the open. We have seen the price action pull back a little bit, but I would be more thinking that that's an expectation in a bit of a consolidation move after what's been a very, very extreme move on Friday. So I would be paying very, very close and particular attention to the escalation in Russia, Ukraine, seeing if there anything more kind of to that, and then being able to assess that into the course of the early parts of the week. Again, if we look at the DXY, massive firming up on Friday and Monday. Sorry, since kind of Thursday, the price action on the DXY has continued to move stronger again in this risk aversion move. Okay, so we're very much seeing, I suppose, even though you're thinking, right, if gold is up, then the dollar should be weaker. But when there's a flight to safety in terms of war, you tend to see gold, you tend to see commodities getting a serious and significant bid. So if you looked at the oil prices last Friday as well, you would have seen oil prices surge massively as well. So it's important to understand these fundamental events as well. Okay, if we look at the Dow Jones, first and foremost in the indices, Dow Jones took out this 34,800 level that I had kind of looked at previously myself, and is continuing to grind lower. So even pre-market this morning, we are down another 350, 400 points from kind of where we stalled out on Friday. So massive moves still happening on the Dow Jones, with indices now progressing lower. So I think at this present time, the markets in these indices are trying to grind lower, and do not be surprised to see price action try and test these lows from the end of January. Okay, so 34,450, the price action is taking lower. It'll be interesting to see, does the price action get down to this 34,000 level? Okay, if we move across to the Nasdaq with the tech play has got hit quite significantly as well. We broke down on Friday, we paused over the weekend, and the price action since then has continued to grind lower. So we've kind of gone from 14,250 all the way back now. We're testing these levels from kind of 13,900 to 14,000, which was the lows of the beginning of the year. So we can see this low from the last week in January is now being tested here. So all eyes to see how does the price action react off this area. And last but not least, then on the indices, then if we move across to the S&P, we can see the S&P has probably held up the most or the best out of the three. But again, repeating this process, we've got the first wave, we've got a little bit of consolidation, we get a second wave through the course of the weekend, and we're in through their third wave of bearish momentum today. So it's all nice to see, does the price action again come down to test these lows between 4,280 and 4,300 on the S&Ps. Okay, so that's given us the viewpoint that the price action at the moment is significantly bearish, is significantly risk off into the beginning of this week. So it's important to be vigilant. Risk management and risk reward becomes ever more present and ever more significant during times of significant volatility like this. Okay, so until later in the week, everyone have a great week and trade safe.